Where is the glimmer of hope amid all the raging war and amid the chaos? There can be no underplaying the human and material costs to war. The fear premium is too real. Only last week, analysts saw crude oil prices soaring into the 90s. Now, with Brent crude over $100 per barrel, we could see crude oil in the mid 100s. With less clarity on how long this war will last and extent of future collateral damage, most economic forecasts are now fraught with very high uncertainty, which is a major drawback for investors and business confidence. But are there more positive outcomes or perspectives associated with intense conflicts? Are there winners that emerge through adoption of different strategic choices? Where is the glimmer of hope when bombs and rockets are wreaking havoc to countries and global economies? Hello, this is Global Business Insights, where we look at the world from a business perspective and bring you news, views, and analysis that helps to bring you up to date on the context. In this episode, without seeking to glorify war, we consider some secondary outcomes that could be positive. Perhaps one major outcome in war is limitation and bottlenecks in flow of resources, resulting in instant gaps and shocks to industries. Energy importers like China, India, Japan, and South Africa will be compelled to fast track not just non fossil fuel alternatives, but adoption of far more resource efficient models. We have had conversations on zero waste business models, with cost of energy at a 4-year high and perhaps going higher. Research to reduce energy consumption per unit production and the lifetime of products being extended. All that is going to accelerate as the world seeks to delink its economic growth from energy cost dynamics. More efficient vehicular services powered by different electrification based on more efficient energy consumption. And the new artificial intelligence technology will focus more than ever on efficiency as data enables more servicification, reusability, and circular models. Countries and corporate entities are forced to stress test the viability of their supply and value chains and spot and deliberately address vulnerabilities which could be amplified in conflict. Very large import-dependent populations can be especially vulnerable in strategic industries such as pharmaceuticals, chip production, and electric battery production, or other specialized components that sustain modern industries. Wars often drive innovation as governments must urgently tackle new challenges. This urgency can lead to advances such as better intelligence for precise targeting, which aims to reduce civilian casualties. Studies indicate that significant technologies like radar, jet engine, advanced communication systems, and breakthrough in trauma care and prosthetics quickly evolved during major conflicts before being adapted for everyday use. Other areas like aviation, weather forecasting, and analysis also benefited from wartime development. If technology and modern intelligence systems can effectively limit a country's ability to wage war, conflicts might end sooner with fewer lives lost. Additionally, certain social reforms have been facilitated or accelerated by periods of intense conflict. For instance, the expanded roles of women during World Wars I and II contributed to advances in women's employment and voting rights, as well as reductions in inequality, which subsequently benefited the global economy. It is important to note that these outcomes should not be regarded as advantages of violence, given the significant and often long-lasting social harm associated with conflict. Nevertheless, post-war mobilization has resulted in more unified and robust demands for improved welfare and public services once hostilities have ceased. However, sociological studies stress that these changes were responses to crisis, not benefits of violence itself, and they often came alongside trauma, displacement, and long term social damage. Legacy institutions formed by post war unity have grown weary. Despite the emergence of strong peace movements, international bodies, and human rights norms after major conflicts, these efforts have not eliminated social oppression, inequality, or ideological division. Issues worsened by an uncontrollable media landscape. Suffering underscores the urgent need to reform international cooperation and technology to prevent global discord and future conflicts. Wars rarely demonstrate fairness, as disparities in military capability often lead parties to pursue aggressive solutions. The Hiroshima and Nagasaki bombings during World War II remain among the most significant acts of warfare in modern history. While they were defended as efforts to expedite the end of the conflict, the extent of devastation and suffering caused by these events continues to prompt ethical debate, particularly regarding the influence of technological advancements on how warfare is executed. This time, proponents argue that significant degradation of Iran's nuclear program and long range missile capabilities prevents an imminent existential threat, or at least reduces chances of future aggression. The conflict reduces capacity to foment instability linked to potency of regional proxies supported by Iran, such as Hezbollah in Lebanon and Hamas in Gaza, by weakening the Islamic Revolutionary Guard Corps, which is considered a major state sponsor of terrorism. Proponents also argue the world could become safer in the long term. Others argue that destabilization of the current regime in Iran, disrupting the Islamic Republic's control, presents the opportunity for some form of less oppressive democracy, which accords better rights, especially to women. From an economic perspective, a reintegration of Iran's significant energy reserves, the second largest gas and third largest oil assets, into the global market, breaking its dependency on and alliance with Russia and China, comes across as an agenda in the best interests of Western alliances who do not want to see a strong China or Russia. Most importantly, the world does not trust a more aggressive United States that seems to have emerged as police and judge, helped by its economic and military superiority, also keen to take advantage of its present strength to make what it sees as urgent geoeconomic corrections that strengthens its geopolitical advantage and influence. Moving on to other developments, German industrial production fell by 0.5% month on month in January, mainly due to reduced output from the metal and pharmaceutical sectors. Compared to last year, industrial production declined by 1.2%, while new industrial orders dropped by over 10% month on month in January. China's consumer inflation exceeded forecasts in February, marking the largest increase in over 3 years. The core consumer price index rose by 1.8% year on year, equaling the rate recorded in March 2019. Meanwhile, the producer price index declined by 0.9% compared to the previous year, performing better than economists' projected decrease of 1.2%. Oil prices surged around 25% today to over $119 a barrel. It since pared some of those gains at levels not seen since mid-2022. This was as major producers cut supplies, supply routes were choked, forcing partial shutdown at production facilities and fears of prolonged shipping disruptions. The result is a record high risk premium, which may not dissipate so quickly this time. The ongoing US-Israeli conflict involving Iran is negatively affecting airline stocks in Asia, intensifying existing challenges for carriers operating within complex airspace conditions. The conflict, compounded by historically high fuel prices, has led to a significant decrease in tourism and travel to and from key Middle Eastern hubs. European markets also experienced a notable decline at the start of the week as traders monitor developments in the region. The US dollar is still rising as soaring oil prices sent investors scrambling for cash, and the market sees a reduced possibility of interest rate cuts coming soon. Dollar sovereign borrowers will be vulnerable. Some commodities will also face headwinds from the strong dollar. United Kingdom Prime Minister Keir Starmer said today that the administration is in continuous talks with international partners about what more can be done to reduce the economic impact amid the ongoing war in the Middle East between the United States, Iran, and Israel, as it seeks ways to de-escalate the situation. The Finance Minister, Rachel Reeves, talking to Bank of England every day, she says, to get ahead of any impact on energy prices. And in South Africa, markets are volatile. The risk-sensitive rand started the week sharply weaker. Investors are digesting surging oil prices and the potential effect on global inflation and growth. A new risk aversion is stoking selling of risk assets and taking profits on some of the trades. The South Africa Reserve Bank governor told media last week that it will revise its risk scenarios for its next policy meeting as the Middle East conflict continues to push oil prices higher. The bank is due to announce its interest rate decision on March 26 after leaving its main lending rate unchanged at 6.75% in a split vote in January. Higher crude prices appear beneficial for Nigeria, raising reserves and easing fiscal strain. However, gains are limited by weak production and reliance on imported refined goods, which fuel inflation and erode real incomes as energy costs drive up food and transportation expenses, squeezing business margins. Nigeria faces a policy challenge requiring a thorough stress test on the monetary ecosystem. Investors may retreat to safer assets like US Treasuries and gold, leading to capital outflows from emerging markets. Indeed, if foreign investors exit Nigeria's fixed income market due to the global uncertainty, Naira pressure will rise. Increased oil revenues can expand liquidity and money supply, historically sparking inflation and exchange rate volatility. Without fiscal discipline, higher revenue might destabilize macroeconomic fundamentals. Fiscal discipline is crucial amid rising dollar values and debt obligations. While higher oil prices boost reserves, moderate deficits, strengthen the naira, and encourage upstream investment, past surges have failed to deliver lasting economic progress due to persistent structural weaknesses. Nigeria's cautious diplomatic stance introduces fragility as it strives to maintain neutrality and preserve ties with Western and Middle Eastern partners. And escalating the conflict in the Middle East could spread extremist narratives in the Sahel, posing security risks for Nigeria and disrupting agricultural logistics and investor confidence, further fueling inflation and slowing growth. Well, that's all we're able to take on this special edition of Global Business Insights. This is Bode Oshosami. Thanks for watching, and don't forget to subscribe and hit the notification button. Bye-bye.